you know what? The market moves according to some math principles. So I've kind of figured out myself, and I like it. I know Fausto uses flow and stuff like that, and I just want to welcome everybody here today. So glad you could make it, and I thank you again, Fausto, for the intro. I don't even know if Fausto knows this, but I've joined his trial membership before. I've done it a couple times over the years, and I've been out there in the crowd listening to Fausto for years. I've learned some stuff, and I'm really excited to be joining his here today talking. I think you'll find that our styles are different, but they can complement each other. So we're both really passionate about helping other people find their way in the markets. That's a key. That's why I do this. You know, people say, if you can trade, then why spend your time talking about it, teaching other people? It's because I have a passion to do that. I've been a scout, a Boy Scout all my life. I'm an Eagle Scout and love helping other people at all times. So for me, it comes from a genuine place. I've spent my whole life trying to figure out what worked for me. Let me introduce myself. I'm Jeffry Turnmire. If you don't know me or you didn't catch that in anywhere, I am born and raised in Knoxville, Tennessee. I've been paper trading since I was in elementary school. We did a little game called the stock market game all the way back then. I'm in my 40s now, so it's been a while. I opened a real account just as soon as I could when I turned 18. I've been trading for well over 20 years in the real markets. Been through the dot-com bust, been through the housing bust, as both a trader and I'm a civil engineer. We run a family engineering business, and we worked the housing industry quite in depth when that happened in 2008. So multiple ways, and I've been trying all sorts of different stuff from all different sorts of people until I finally figured out how to find my own success here. And my story isn't one about Wall Street insider who went rogue or a boy genius that developed a perfect trading system, dropped out of college, or some whiz bang figured it out right off the bat. I bet my trading story is pretty similar to most people out there. I spent my whole life just trying to figure out what the devil worked to make a little bit of money. And to put it simply, after over 20 years of searching, I discovered that Fibonacci was that key for me. In 2013, I started trading with a futures expert who used Fibonacci to predict and optimize some daily price movements. And it was kind of fascinating, but it really didn't click with me for a while. It wasn't until about 2018 that things really started to change for me. I picked up this little thing we call Elliott wave principle. And I taught myself that Elliott wave theory. And I realized that Fibonacci could not only find support and resistance, but could also identify when a next move is possibly coming down the chart and how big that move could be. This is the unique blend of an Elliott wave that I go through a little bit today. I'm going to give you a taste, teach a little bit to you. I'm not going to promise that I can, convey any vast amount of knowledge here today because we just have a limited time. But using some of these techniques, I've been able to grow my family's accounts to over 1.4 million during the crash that we know that happened in 2020. And then I accurately anticipated both highs and lows in Bitcoin last year. And then I predicted back-to-back insane wins of 357% and 821% on SPY. And then just 2 weeks, I nailed a 1,000% gain inside my Discord chat and members that were there. So I just have a ton of these back-to-back successes that just keep on coming. And I don't mean to brag about my accomplishments, but the point is, for me, Fibonacci has been the answer, the path through the markets that I've wanted for so. I don't promise to be everyone's answer, but I'm thrilled to be on with Fausto, his students, to talk through how I trade and to try to folks use this stuff too, because for me, Fibonacci has been life-changing. So if you're looking for a new approach to chart or trying to learn how to potentially anticipate big market turns or even little market turns, or you're scared of words like math and Fibonacci, but maybe you're a little bit curious how those affect the market. Well, you're in the right place. So today, we're going to go through the pattern, some of the patterns that I use to anticipate these major market reversals, how I use Fibonacci to draw lines of support and resistance. That gets you stops and targets if you're not familiar with support and resistance, and how you can potentially apply these patterns to your own trading. And we'll discuss what I'm seeing in the market right now. I mean, we've had yesterday was a kind of a record day. There were more shares of SPY and QQQ traded on a dollar value basis than we've ever had. So got some crazy time right now here in 2022. Now, before we get started, one final thing, ground rules. What I'm covering here today is free, but if you aren't prepared to do hard work and apply techniques to your own trading, it's not really worth your time to stick around. I can't and won't guarantee profits or success. All trading involves a substantial risk of loss, and you should never trade with a bottom dollar or even money you need to pay your rent, feed your kids, buy your medicine. Don't trade with that money. If you got to have that money to live, get out of trading. Now, are you ready to check out some of the charts and learn how to trade with this market math? Let me know in the chat. Let's get some interactivity going here. Yes, yes, yes. All right. Let's get started. Let's dive into some charts. All right. I'm going to pop out of the slideshow here briefly. And let's jump into some charts. We're going to start with ES here. This is the S&P 500 futures, if you're not familiar. I'm going to use the free trading platform TradingView here. You can go to tradingview.com, make a little account, log in, and you can get these same charts that I'm going to see. This is a free account. It'll probably pop up an ad here in a minute. I use the free account because I hate seeing everybody say, oh, you got to buy this piece of software. You got to buy that piece of software. Well, this stuff should, at least be attainable for getting started, right? So I try to make it that getting started ability. Now, I've got some tools and stuff already set up on a little short bar, and we're not going to go through all that at the moment. But let me show you how I predicted this turn right here. And I called it out in my Discord server. I gave people a warning on Friday even that we'd see a lower low on Monday, and then we'd probably see a strong reversal off that lower low. That's exactly what happened if you were watching, I think. So I'm going to run this fib tool right here. I call it the 3-point tool. Pop it down here and pop it off the high. And we get this line right here. It's a 1618 extension of this prior pullback we had in September. All right, we run the high, first point, second point, projected off this third point. That's why I call it the 3-point tool. It takes 3 points. And this move right here, when projected off of this current move down here was 1.618 times bigger than this pullback we had in September, October. So I was expecting it to hit this level right here, especially because we had this trend line of higher lows coming up here, and we broke it back here on the 18th. I expected us to hit, everybody's like, what is this EMA you got on your chart? Well, it's a 144 EMA. I'll just tell you right now. And it's 144 is a Fibonacci number. Why not the 50? Why not the 200? Why not a lot of stuff? I use Fibonacci numbers. 144 EMA is a Fibonacci number. Why an exponential moving average? Because it places more importance on current price action than it does on further away price action. So that more importance to me, the current price is the truth in the market. So I place more importance on that than I do stuff that happened a month ago, 144 days ago, whatever. So right there, I was predicting a move down to 4,500 for my followers. That's something we've talked about. We talked about it for a couple of weeks, actually. When we started coming down off this high in early January, we talked about the very real possibility that we could see 4,500, especially if we came down here to this trend line, then we bounced. We hit what was a 618 retrace. And that looked something like this right here. We bounced right off that 618 retrace, that pink line. And then we started heading down. And when we broke that trend line, I was wondering we could see that 4,500 finally. And then when we broke the 4,500, where were we going? Well, we started having to use some higher time frame analysis and figure out what kind of target we could have. And I was looking for a move at least to this 4,300 area right in here, We poked a little bit lower than that, stretching down below the low we made back here in October. But we quickly reversed, and we actually ended up the day green yesterday, which was an insane move on the SP 500. We were down, I think, almost 170 points at one point, and then ended the day 12 points up. So a 357 point round trip, pretty crazy. So where are we going from here? Well, as long as we can maintain this support line right here, and we've tested it 2 days now, 2 days in a row, and maintained it, then we're starting to look higher. What does higher look like at this point? Well, let me remove this so we can clear up a few lines here. I'm going to leave these lines on here because they're historic for me. What I've been talking about in my own other webinars from my followers. And we're going to come up to some resistance points. The 50% retrace is going to be back up here around 4,500, where we broke through. We get to that level. We also have a weekly pivot in here. And this 618 is really the first major test for the market. And I use the S&P 500 as my general market gauge. Then I dive into some of the other ones. Just so you know, for those who aren't familiar at all with me. So right now, as long as we're maintaining this support level down here, we're looking for a move back up in here. This is going to tell us if we find a resistance here, it could turn down and we could see a lower low. And I'm not going to do the projections here today for lower low because I don't feel like that's the higher probability right now. The higher probability I feel like right now is a move that we're going to be back up here and get these extensions around 5,000 and maybe even extend on up to around 52 or super stretch goal up around 5,500, 5,600. So we could see that on the next run, but we've got some headwinds and some resistance that we've got to clear through along the way. So those are some objectives that we got to get through on the market. Now, I do not have Ichimoku on my chart. These are EMA based clouds. It's an 834, and I just have converted them into clouds instead of into just lines, because it gets to be a lot of lines, and I can quickly look at it. And when the 8's above the 34, it makes a green cloud. When the 8 EMA is below the 34 EMA, it makes a little pink red cloud. Combine that together with some of my stuff, and the indicator I've got here is called Echo Trades. It's a custom indicator that I wrote and give out to my members who buy Echo Trades. So I use that as a base, and some of the other pieces in here, like the 144 EMA, I give out. Just basically told you all the pieces here. So, all right, moving on. Big tech. This one is in a little bit different position here. Yeah, I've got a lot of different lines on this chart, and we are below the prior low there. We've extended more than what I'd like to see, really. So big tech is in a tough place, but it has also, let me get that in the right spot there. It has also touched this 2.272, 227.2% extension. It bounced right off of it yesterday, kind of floating in no man's land today, but we're out there, bounced right off of it. If we can hold that level, that's again bullish for tech. Now there does flip it up to a higher time frame chart. Like I mentioned on ES, we weren't going to really talk about the bigger time frame risks, but there are bigger time frame 144 EMAs. These are all fractal in nature. That means they're self-similar. All the different time frames, the same EMAs work, and it just bounces from time frame to time frame to time frame. On your corrections, on your extensions, all this stuff just accumulates. So right now, again, looking for a bottom to maybe be in. There is the possibility that we go down and retest that and could possibly push just a little lower on both ES and NQ. That possibility still hangs out there until we can clear some of the higher resistance areas. Another one I've had my eye on all last year, we were in this giant consolidation on Russell. We poked out the top, we've poked out the bottom. We did hit an extension down here. is a retracement that I don't have on this chart, and it gets a little confusing. But the big takeaway here, this move and this move right here, and this first drop and this third drop, 1, 2, 3, 1, move back up was 2, and the drop 3. The first one and the third one there were almost exactly the same. All right, I look for symmetry and things that are the same, pullback moves that are the same, because when you find moves that are the same, they tend to echo, and that's where my echo trade system starts getting its namesake from, is looking for those things in the market that are self-similar, they echo, and so you can expect the same sort of things to happen. Now, this move right here is also similar to other moves that have happened in prior places in the Russell. So I'm looking for this support area to hold right in here. I'm looking for this to be some sort of bottom, and it could extend just a little lower, but I'm expecting this to be a lasting bottom. And I really have some lofty goals for Russell to at least get to 250 this year. We're looking at a move off this pullback, 2658 on the index, which if you trade IWM, which is the ETF, that could take you to 260 on IWM. Now, 290 is also a quite possible target. And this is reaching this one has like an 80% probability once we clear the 618 level, which is all the way down here at 2260 area. So these things get to be, we got to work through the resistance. We're going to have to work back up through this consolidation that we had that was almost a year long. We have to work back up through that. And then once we get above here, we can see a breakout, get those higher targets, and hopefully even some lofty targets here, all the way up, maybe even a 34.28 at 272. And we talked about it on the NASDAQ, on its way down. NQ, if you're not familiar, NASDAQ futures. And this is the Russell 2000 futures right here. Now, question might be, why in the world do you use futures? Well, when we zoom in here, the futures charts don't have any gaps in them, or very little, very few. They just don't gap because they trade almost 24 hours a day. So that's why I use futures, because they pretty much have complete price action. Everything's connected, everything's complete. It trades round the clock, just a 30 minutes close time or whatever. And that's the big takeaway why I use futures. And I translate that to trades in, for S&P 500 SPY or SXXSP or even SPX itself. I'll trade QQQs. I'll trade IWM for Russell. So these things I use these to make my predictions, then I make my trades with the ETFs. Let's talk briefly about oil. I don't know if there's any big oil traders out there right now with us today, but I've been on top of this. My favorite symbol for oil, my favorite ETF is UCO. It's Uniform Charlie Oscar. Now, I was looking, we were looking for a loftier target when we came up into this high in October, and we started pulling back, and we projected that we probably return back into this low area. And then we set up with a higher low, and I started doing some projections. We drew this resistance zone. This is where we had support on the way down, and I drew a resistance zone here. I said, if we break out of the top of there, we're definitely going to a higher high, which we tagged a higher high, just marginally. We've gotten a little pullback from it. And now, if we can get the extensions, we're looking for a move up to 93 and maybe 101 on oil. We've got to get back up through there and start making some positive movement above the prior high that we had. And we did make a higher high, but we need to make some positive move, get some daily closes that are up in this area, up in this free space. And that'll start getting us to some extensions. So on UCO, that looks like, I can bring that one up and talk about it directly because I've actually got an open trade on UCO right now. we broke up through that consolidation I was showing you on the oil chart, I bought into UCO 110 calls. And we kind of tagged the 110 area there and pulled back. There was a fib number right there. And I'm looking for this breakout to continue and to get some extensions. Now, 135, there's some headwind at 115. I'm not gonna, not gonna sugarcoat it all here. There is some resistance at 115 area that we've got to get through to see those higher prices. But 135 is right now is my kind of upside target for UCO. I was sharing that with members of my chat today. So another one we can talk about, gold. I don't know if we have any gold traders here, but this one is looking promising. It was a heartbreak back here in November. We got this big retrace. It started pushing the limits of some of the support. Really got iffy right here this one day in December when it poked down through both trends. I was really concerned, but the very next day it was popped right back up, finding some support. It is now broken through the resistance it formed early in January. I am long a gold future contract right now, and I'm also in a GLD spread. I bought the 172 and sold the 180 for, I believe it's June. So I'm looking for that move on up through here. Now, this will provide a resistance at 1882. I'm in the April UCO call. Gave me the time. So we do have a resistance right here on gold in this area, right in here, prior high. We'll have to break through that, but that sets us up to get to this 1920 area, which is a high right here. So we're gonna have to stair step up through these resistance levels. We made a series of lower highs on the way down here, and we're gonna have to stair step our way back up through these as we go higher. So each of these resistance zones are gonna be a target to get up through, get up through, get up through, before we can see possibly higher highs later in 2022. I think it's entirely possible. I think somewhere out here around 2200 is going to be the extension. But we got a lot of resistance ahead of us before we get to those levels on gold. And this is GC. That's the gold future. I use these continuous contracts, GC1 exclamation point, if you're not familiar with how to pull that up on TradingView. All right. Another thing, I kind of bragged on myself slightly a little bit in the opening there about Bitcoin. So do I teach or review what I've done for his trading? What do you exactly mean by do I teach or review? Trying to want to answer your question. So I do these all the time. I do trade the things I'm teaching right here. I'm showing. So I already have a lot of content set up on the charts, and we're going to jump into some new charts, and I'll take some requests here in just a minute. All right. So Bitcoin, I was looking for this prior, what was resistance back in the summer, resistance back in the summer, turned support into the fall. I was looking for that support to hold. It didn't hold. We have some extensions, and this actually became a bigger retrace of the whole move up, which I don't have on this chart. I have it on my other chart. Let me clear off a couple things and show it real. So we had a move up like this, and we came into the 786 line right here. Found some support there. There are a few more lower levels right down around 31.9, I think 31,009. But right now, if we hold that 786 line, it can turn quite bullish quite fast. And Bitcoin's been known to go on some serious rips. Now, a trick that I found on Bitcoin, so you get 3 days, 3 green days in a row where both Bitcoin and Ethereum are green, and not with dojis. then they tend to go on a multi-day to multi-week run. That's something to take away and keep an eye out for. It's just back here when you get 3 green days in a row, you tend to get a lot more than 3 green days and kick off a new run. That's happened over and over in the history of since Bitcoin and Ethereum have been trading together. So upside targets, I'm looking for around 80,000 on Bitcoin. This is probably going to happen, I don't know, mid 2022 at this point. I was looking for it the first quarter, but it's looking like this consolidation is going to take a little bit longer to get out of. Of course, it could break out and go all of a sudden. And we do see some fast rips. It went from 40,000 up to all-time highs at 69,000. It did that in 2 months, relatively. So it can go on a nice fast run and get all the way back up there quite quickly. All right. So now I've kind of covered the general broad markets that most people are interested in. We're going to take some, let's take some requests. If you guys want to see something, I'll pull up a chart. I'll use some fib. I'll make a prediction. We'll see what we can get. Ford. I see Ford. All right. I see Fubo. Let's see. I see Fubo first. So Fubo, BO. Come on, fingers. All right. Well, first off, that's a downtrend. That's going to be counter to the market, really. It's been down for a while. We've got an initial move down off the high, a retrace, and next move down. So right there off the top, I see a 3-wave move. Something like that. We're just shy of hitting the point where this first move down and the third move down are the same size. That comes in about 850. So that's going to be a pretty good support. Now, if we break right on through there, if for some reason it just decides to get on down, then this 576 area is going to come into play. And below that, we start looking for 350. That's what I see on Fubo right at the moment, just right off the top of my head. So those are going to be my resistance zones. If this holds right here and can turn around, and I have some ways to make some turnaround predictions, I have a whole set of EMA crosses and things that have to happen for an early entry, a confirmation, an aggressive entry, conservative entry. It just piles up, and we work through the time frame analysis and get it. But your upside resistance is going to be all the way back up here around 30 or 29, looks like. So you've got quite a ways to go back up if it can hold that support down here. All right. I saw Ford up here. That'd be the next one I saw. All right. I had done this analysis for members of mine last week based on the fib levels. I predicted that once we hit this extension up here and bounce down, and the time I did it, we had this big red candle. I said we were likely to hit to this retrace at the minimum, which was where we had this prior consolidation, pull it across there. If we break down through that, we're likely to see the 144 EMA on the daily, which I can't quite tell where we're at today. Let me zoom it up. Yeah, so we just tested that prior support zone, prior consolidation zone. Tried to break down today. Looks like we had a red doji. Move the red candles over, or move the red arrows over. Yeah, little red doji today. So if we hold this, it could turn around and be bullish. It looks like it found support right at that confluence of those EMAs, or the fib lines, excuse me. Confluence of the fib lines. Found a little support. So this box it's got to break back out of this box. And it's probably a little higher there, grabbing the rest of those candles. When we break out of the top of that, where's the top of that? It's around $20.75 roughly. So you're going to be looking for a move back above 21. And that probably signals that we're going to go on another run. And if you can't get up out of there, then we're likely to revisit these lower levels, this confluence zone of these fibs right here around 17, 18. If we can't hold that, then we can see a move all the way back to this prior high back here, back around 1650. And of course, if it can't hold that, it just stair steps on down the fib level back to lower high, places where it had lower consolidations before and before. All right. Next up, XBI. X-ray, Bravo, India. Another one looks like it's on a downtrend. So why do I put these clouds on here? Real quickly, I can pull this up and say, that's a downtrend. I don't even have to spend a whole lot on it. I mean, I'm looking at, there's 3 months. It's been red the whole time. That's a downtrend. I think 3 months of lower low, moving down, and I think we can all agree is a downtrend. And it looks like it's been going longer than that. So where might we go? We're gonna have to zoom out a bit to see where we might go on this one. So zooming out to this overall swing low to swing high. Looks like we're pushing the limits, and we may see a move on down to the 786 level. So this is going to be the next support. If it can't just break out of the funk it's in right now, this is going to be the next level down here. We don't have a real clear 3-wave down that is just obvious to me at this point. I'd have to dive deeper into this chart to really get it. Looks like we touched the, if you use this move down, this move up, I'd have to really start diving through a couple of the time frames to check and see if this is the best use of this tool. But right now it's looking like that 8609, 1272 extension of the first move down. That could be it. A lot of times it will extend further and you may see a move down to 75. But there could be a reversal brewing here. And a lot of these reversals do line up with the broader market, where I feel like we're at a point or almost to the point where we're going to turn around. So, all right, UVXY. And this was a little tougher right here because it is a decaying asset. And the spike we had back here in 2020, it's inaccurate because this thing did a 10-for-1 reverse split. So all these prices are amplified by 10 times. This one's a little bit unique, and then it makes it hard to establish it. It's always going to be in a downtrend because it's a decaying asset. If you're not sure what that means, go pull up the prospectus, Google UVXY prospectus, read it, and look at the fact that it's only has the 1.5 multiplier of the VIX futures contracts based on a daily, just on a daily time frame. It doesn't track over multiple days, and it has contango and backwardation costs, management costs, and it's basically going to zero all the time. Now, people that write the options contracts on this know that it's going to zero all the time, so it's extremely hard to make money in UVXY, even selling premium or selling VIX. So, all right. I don't really have any upside targets on that because, it looks like it's doing the same thing it's always done, going down. I don't expect a bigger market correction and more volatility right now in the short term. So UVXY would not be one that had my attention. All right. Apple. We did get a significant pullback in Apple right down to the daily 144 EMA. I mentioned it, going to get some pop-ups here. So we pulled right down to the daily 144 EMA. We hadn't been down there since October. I expect that level to hold right now. If it doesn't, then I'll have to revise my thinking. But right now, I'm pretty confident that that's going to hold. Now I had a fib line drawn on here from the prior pullback. We did make a higher high here, so need to revise that to the current high to the current low. So we've got some headwinds coming in here. This consolidation that took place in December and most of January forms this resistance box that also just happens to line up with the 50% retracement and 100%, this upper 50% of this move down has some headwinds. And we've got this low that we made right there before Christmas. That'll be our resistance on the way back up for Apple. So at this point, I think I would probably count on that being a significant resistance or significant support for right now. This kind of 144 EMA line extended out. I would count on that being the support as long as we can hold above there. And then, like I said, it sets up conditions to go higher. I do see higher targets. 191, full disclosure, I am long Apple shares. So I've been long Apple shares since down here around 140 back in October, September, October, when it did this. So I am still bullish Apple, even through this pullback, still bullish. Still holding on to my shares. All right, DPZ, Domino's Pizza, I believe. Yep. So it has broken through the daily 144 EMA. Right now, it's kind of a downtrend. It did make a higher high over here. So we don't have the 3-wave situation we can work off of. This last consolidation took several months into the low, significant low, up to the high. We've done a 50% retracement. I find that the 61.8 is a much stronger support. So we may see one more push down to test this 400 level on DPZ before we find real firm support. That's a cautionary. It can turn around right here at the 50% at the 428 area, but it may see a move on down to 400 before it finds real support. Yeah, it looks like it is finding a little, it has reversed, but it's chopping right there, and it may find one more push lower to flush on out. All right, CVX, Charlie Victor X-ray. Well, that's an uptrend right there. That fits with my oil play. What kind of upside targets? The high to the low here. And we're pushing on through. So 145 will be my next upside target. I'm kind of a swing trader, so I look on the bigger picture, using a lot of daily charts, but I do use hourlies down to 30 minutes, and I even do a little day trading on 5 and 1 minute charts. I am in and out of futures quite a bit. So looks like right there, that'd be my target area. And above that, we'd be looking for 156 area, 155, 156 above that. And then, super extension targets up to 214, 215 area. Each of these becomes stronger resistance. As you can see, it had a little trouble getting through the 100. Then it pushed its way out to the 1272, retraced all the way back to the 100, found some strength, pushed out to the 1618, found a little resistance. Now it's popping through today. That's how it runs. So I would expect a little bit of resistance when we get up here to this 145, 67-ish area. A little bit of resistance there. If it doesn't and just keeps on sailing, each one of these becomes stronger and stronger resistance to the upside. All right, ETHE. Pull up the right one. There's a couple of those. Grayscale. All right. Yeah, this one has not been performing well. It broke down through the 144 EMA very strongly. Met that resistance, held that upside resistance right there. It's got support coming in at these prior lows. Looks like it's just getting into that yesterday. Today a little bit higher. So it's got some work to do to break out of this funk. And using some of my my other techniques, this pullback this pullback, and we're just getting where it has symmetry between these pullbacks. It could find support right here. This could be the support it needs to turn around. But it does have some downside targets: 1359, 963, 503. All right. All right, CVS, Charlie Victor Sierra. Guys, I have some other tricks on Apple I do too. I see a comment about being able to see what I see on Apple. I have some other tricks that I also keep track of on my daily basis for Apple. So I had done some prior analysis and predicted a deeper retrace. Looks like we pushed the limits on some of the retrace. Zoom it up a little bit more here. So big thing to watch out for here. The fact this pullback prior, to be able to echo that pullback we had before, we need just a little bit deeper on CVS. So 98.82 is going to be a support that it could come down and visit. Being green yesterday and green today, that's a good sign. It does need to make some higher highs though. So this could be a long on a breakout above this area right here, which has been a resistance. You know, it was a support turned resistance. So a breakout through, say 104. Could take this up to some targets around 109.50 or 112 above that. Of course, you got to work through this resistance zone that just happens to line up with the 618. Like I said, a move up through 104, 104.50. It's going to set it up to start working towards those higher targets. All right, Delta Victor November. All right, we'll take just a couple more, and then I'm going to have to wrap it up because I've got a thing I'm going to invite y'all to at 4 o'clock. Fausto is going to come join me. So DVN looks like an uptrend. We didn't have much of a pullback there, but if you ran off the pullback, looks like the upside targets right now, 54.90 to 55 area, 58.50 above that. And that's going to be your upside targets. You know, maybe a little resistance at this prior high. So as long as you can push right on through 55 to 58 and see if you want to see if how that relates to a prior move, you can sit here and run off of that pullback. You see you got just shy of the 1618 right there, just shy of 53 on that last run. So the 1272 is a higher probability target. The 1618 drops in probability. This is like a 80% likely to be hit, and this drops down to like somewhere around 40 to 50%, and then dropping on down as we get higher. All right. Let's see. Any more that I could do really quick? Let's see. All right. Let's hop over and let's pop back into my slideshow and just kind of wrap it up here. So who's ready to go further with some Fibonacci stuff? Because I want you to let me know in the chat real quick if you found something out of this today, a little fascinating, interesting, helpful, useful, any of those things, let me know in the chat. Yes, yes. All right, good. Because that's exactly what I want us to do. There's a lot more that we can do with Fibonacci levels, and I can teach you a whole lot more about it. I was only able to give you a taste in this short class we had today, how powerful these tools are for predicting turns and supports and stuff like that. And I'd love to take you even further if that's okay with everybody here. Yeah, would you like access to another class where just you and I can sit here and learn just about everything I know about Fibonacci? I want to invite you to a special class this Thursday, January 27th at 1 p.m. In this special class, I've planned just for Fausto students here today, where we're going to dive in deep into Fibonacci levels, how to use them, how I find the echo trades. We'll cover the origin of Fibonacci, how I build my charts with Fibonacci, all the settings, my favorite settings, the colors, why I use the colors I use, how I use Fibonacci to analyze those markets. the day trading patterns. I'll teach you a day trading pattern. I'll teach you a swing trading pattern, all the questions you might have. And if you register for this class, I'm going to give you my top 10 watch list that I keep up on my screen all day, every day. And this watch list includes stocks, it includes ETFs, it includes futures, it includes cryptos that I watch all the time, every day. We're going to analyze them together in class so you can see how I set up the Fibonacci levels on those and to find the trades in those top 10 stocks and options and futures and cryptos. So this is going to take place on January 27th at 1 p.m. If you can't make it live, you can access the recording and we'll get it sent out just as soon as we finish the class. Even better, I've included bonuses that I'm confident that you'll want to take advantage of. I have a Fibonacci EMA indicator that I'm going to share with everybody in the class. In other words, you can place my very own Fibonacci indicator right on your charts so you can trade the exact levels and patterns that I use in TradingView. So if that sounds good, let me know in the chat that you think that sounds pretty cool. And I hope a lot of you are going to be interested to attend this class. But let me be honest, there's many traders out here that should not take this class. I don't think it's a problem in Fausto's crowd, but you shouldn't take this class if you're expecting a magic bullet for making fortunes in the market. You shouldn't take the class if you're not willing to put in some work. All trading takes hard work. And you shouldn't take the class if you're not willing to commit to learning and practicing the techniques. But if you're ready to put in some work and want to learn the tools to predict market reversals, then you need to be at my class. So here's the best part. I know for a fact that I could charge hundreds of dollars or more for this class. In fact, I have members that pay me a lot of money. And be honest, I've spent thousands of my own money learning these techniques over the years, and not even to put a value on the time I've spent working on this. But because you've already committed your time and you've spent the afternoon with me or the evening, and because I've been one of Fausto's students myself and know how hard it is that you work to learn this stuff, I want to offer you the best price I can. So my class is going to be $97. Remember, everything you're going to learn: how to build the charts, how to predict the levels, how to use the levels, day trading and swing trading patterns, any and all the questions you have, and so much more. My top 10 watch list, a handcrafted indicator, and one more thing to show you how serious I am. I taught this class because I love the techniques, and I'm going to keep the price low because I want lots of people to attend. I value my time and the work I've put into learning these methods, but I want you to join this class with confidence. So I'm going to offer you a 30-day, no question asked, ironclad, money-back guarantee. If you're not happy, you can keep all the materials from the class and get your money back. So if you want to join the class and aren't 100% satisfied with what you get, you'll get your money back. Just call my team and we'll take care of you. You'll even keep those class materials, like I said. So it's my way of showing you that I value and trust you. All right. So one final reminder: the forecasting market turns with Fibonacci. We're going to get the top 10 watch class, handcrafted indicator, and a 30-day money back guarantee. So you ready to join me? Head over to jeffreytrader.com/CTU. Call 855-454-0816. All right. How long do you have access to the classes? As long as the internet lasts. All right. How long is a class? Roughly 90 minutes to 2 hours. I usually keep it going until all the questions are pretty much done. You need to be a math wizard or Fibonacci wizard? No, you don't have to have no calculus. You don't have to know math. The tools are built into pretty much every trading platform, and I'll make it as easy as I can. Is this a live class? Yes, it's live with me. You'll get to ask questions as long as you're there on Thursday, January 27th at 1 p.m. It's 2 days from now. Will you be able to use the indicators on your own charts? I'm going to provide you with all the tools, all the settings for TradingView, which is a free platform. If you want to extend it over to other things like Thinkorswim or NinjaTrader, it's all built into those platforms and the settings are all the same. You can take the screenshots and transfer it over. All right. jeffreytrader.com/CTU. Get the stuff. What do you need? Any more questions? Will they work in Thinkorswim? You're going to have to do a little work yourself, but all the settings are there. I use Thinkorswim too. I used to use it a lot more before I open a new futures account that plugs into one of my other platforms. I do use MotiveWave. So, all right. Now, come join Fausto and I on my own weekly appreciation webinar. It's getting started here at 5 o'clock, about 6 minutes from now. We do it every Tuesday, so you can come join me. Here's the link, and we're going to throw it in the chat for everybody, so you can pop over and listen to Fausto talk about his pitch here in a few minutes. All right. So I'm going to have to wrap it up here. Got jeffreytrader.com/CTU 855-454-0816. Come join me. I'm going to have to jump off here so I can go start up my webinar for my people. Fausto, thanks for having me, buddy. I appreciate it. I hope to see you here in a few minutes on mine.